Thanksgiving week and Black Friday brought a good mood to the stock market. In a moment we'll review one of our trades, a profitable one that we looked at as we followed the rally started last week with Tim Geithner's nomination to the Treasury Secretary position in the new administration. But first, the week in a nutshell. Stock indices closed the week up, both in the US and overseas. Most sectors were up. Bonds were slightly down, crude oil didn't do much, while gold continued to climb. Our long-term portfolio is still in cash as we wait for the day the market gets out of this hellish fall, and that unfortunately may still be a long wait. So we are currently focusing on short-term trades. Speaking of which, let us look at one of the trades we had last week, then we'll address all the other points in more detail. All major equity indices rallied last week, as shown in the weekly Dow Jones Industrial Chart. And the Qs rallied as well. The up move started last Friday, with Tim Geithner's nomination. We opened a new position early Monday, closing it on Friday morning, with the December 28 call QAVLB. The $2,000 trade that we got into the habit of discussing in these reports bought 12 contracts and we had a 35% profit. The market had a rather narrow range this week, but the result is impressive nonetheless. The performance comparison chart shows our favorite equity indices up anywhere between 9 and 12% for the week, a very nice Thanksgiving rally in the stock market. Longer term charts give a bit more sober view. In the month of November they lost 5 to 12%, and the year-to-date performance is still down 35 to 40%. International stocks also rallied this week across the board, but the year-to-date performance data are down in the 35 to 55% range. So this week had a nice positive flavor, but the rally is still in the counter-trend mode within a still ongoing bear market. Starting a long-term rally will take more effort. Bonds were marginally down this week, suffering from the rally in the equity world. Crude oil had a quiet week of little change. Our signals are still down. The good news is that gas at the pump is below the $2 per gallon mark. One more reason for Thanksgiving here. Gold is still marching up. We have to see if the bull move continues or bounces back down next week. We are now on hold for gold. The weekly performance comparison of the four markets clearly showed a nice equity rally, the slight up move in gold and crude oil, and a small loss in bonds. The year-to-date view shows the S&P 500 and crude oil contending the dubious title of worst performer, pressing the minus 40% mark year-to-date. In the sector's weekly view, the financials outperformed the rest of the gang, ringing up a 30% gain this week, more than twice the other sector's performance. However, they are still the worst performer year-to-date, down close to minus 60%. This is it for this week. We hope you enjoyed this report. If you did, please post your comments on the site and share this video with your friends. Also, visit outpaces.com to get more data on the stock market, trading techniques, free videos, and information on our services. We'll see you in the market next week. Happy trading!